Coming up on Business Incorporated. South Africa's economic activity bounced back strongly in May after worst flood in 3 decades. And Namibia expects its largest oil discovery since independence as Total Energies makes important oil find. Plus, Egypt's Chevron signed Memorandum of Understanding over East Mediterranean natural gas transfer. Hello, welcome to the program. I'm Ladi Williams. Let's take a look at how your money is performing at intraday. We see in Africa, Nigeria's equities market is still in negative territory while sustaining the 50,000 level it closed yesterday. The all-share index had shed almost 0.5%. South Africa, the sentiment flipped with the all-share index gaining more than 1% at intraday. And positive sentiment is shared by investors in Egypt as the activities led to a 0.2% gain on the EGX30. Meanwhile, Kenya's market dipped as the all-share index shed about 0.17%. All right, now let's head on to the UK, where EasyJet cabin staff based in Spain are planning to strike for 9 days in July, just as the peak summer travel season gets underway. Let's hear more now from Juliana right there in the UK. Well, there's warnings now that the UK rail strikes are going to cost the hospitality industries, restaurants, pubs, and other businesses about £500 million in revenue. How's this being received?
Good afternoon, Laddie. Well, it's not been received very well. As you can see, I'm in King's Cross, which is a very popular travel destination, a travel hub that takes commuters not just to different parts of the country, it also can take you to France and Amsterdam, which many people would have wanted to go to today. But of course, they'll be suffering from severe delays because, as we've been discussing, Britain is facing its biggest industrial action on the rail for 30 years. Talks between union bosses and the government haven't gone down too well, so the strikes have gone ahead. Typically, behind me, you would be seeing tens of thousands of people, but that's not the case today. It is a little bit buzzy because it's lunchtime, but in early hours, it did feel as if we were in some sort of lockdown because so many commuters decided to heed the government's warning and they have stayed at home. You spoke about the economy, and that's a massive hit. Just behind me here, there's a store here that's selling sweets. And of course, they would expect to be very, very busy. They're not busy because they just don't have the amount of people coming in. And I think this is going to be replicated around the hospitality sector. So many people are not going to be going for drinks after work. They're not going to be eating out at lunchtime because simply they are working from home. And that is something that Boris Johnson and the rest of the cabinet will have to contend with. They have been having emergency discussions. They had a cabinet meeting this morning, and there are suggestions that Kwasi Kwarteng, the business secretary, alongside the Transport Secretary, Grant Shapps, will indeed change the law. They're looking at changing the law to make it more difficult for these union strikes to hit commuters. And they're saying that what they want to do is get agency staff workers in, but that has not gone down too well with union bosses. So we can expect more heartache, I'm afraid, on Thursday and on Saturday when those next 2 strikes will be happening. But of course, it's going to affect commuters all week. So we'll have to wait and see what happens at the end of the day when people are trying to get home. But a lot of angry commuters we've been speaking to at King's Cross today.
Right, I can imagine. Well, we'll watch and see how the outcome of those meetings. But we still have more bleak data. It's a 13-year high for grocery prices right there in the UK. The data just keeps getting bleak, Juliana.
Yes, it does keep getting bleak. We're actually waiting for the official inflation figures that are due out tomorrow for the month of April. We're currently at 9%, which is way higher than the Bank of England benchmark at 2%. Some suggestions that double-digit inflation could be reached tomorrow. There were suggestions that 11% would be reached by the end of the year, but we are constantly seeing prices rising, and it is really hitting families who are already on the brink thus far. So Kantar, they've released data earlier today showing that grocery prices are at a 13-year high. Families are paying £40 more on a grocery shop, and they are trying to go to cheaper options, but those cheaper options are not available. I'm actually surrounded right now, Laddie, we are live, so I can say it, by Network Rail staff who do want us to move from this location, which we will do. But yes, the cost of living crisis is hitting people pretty hard right now. And the year of the squeeze has entered the summer of discontent. That's another buzzword for you. But over to you in the studio, and we'll catch up much later.
All right, Juliana, thank you so much. Always great having you. Thank you. All right, now let's move on to Europe. We see the EU Commission President Ursula von der Leyen has warned against backtracking on goals to cut fossil fuels as European countries turn to coal to replace Russian gas. We have Chimponda Chimbelu right there with the details. Great to have you, Chip. So how much of a concern is this warning?
Well, this warning is, of course, a concern because it's really about carbon emissions in Europe and the fact that we've seen 3 countries, the Netherlands, Germany and Austria, say that they will be turning to their coal power plants to produce more energy and electricity. That is a concern because, of course, coal accounts for more carbon emissions than natural gas or energy produced from natural gas. So that is why the EU Commission is really concerned about this. They're concerned because, of course, they have very ambitious climate goals or goals to reduce carbon emissions. By 2030, they want to more than halve carbon emissions, and this is the EU's Fit for 55 plan. So they don't want to see more coal energy or anything that produces, carbon emissions to be out there. But of course, these are dire times for the EU when it comes to energy, and countries are trying to do what they can to make sure that there's enough energy out there. So they are warning because, of course, they want to see that there's no reduced investment, for instance, in renewables, that, of course, while in the short term, countries are turning to coal, that they're still investing more so that they can, of course, really make it with their plan to reduce, carbon emissions by more than half of what they are right now by 2030.
And what do businesses say? Climate change goals factoring into how they deal with the energy crisis?
Well, the president of the Federation of German Industries was speaking at a press conference today, and he did bring up, investment in renewables. But the fact is that focusing on, energy flow is really the issue. Getting enough energy for them to maintain production, especially in German industry. Germany is an industry-driven country, so a lot of companies, businesses are trying to make sure they get the energy they need to be producing the goods that they make, and that is the major concern at this point. And this is why they've welcomed the government's move to ensure that energy can carry on flowing as well as it has by turning to coal production, while at the same time they ensure that natural gas is being stored for the winter months. So their concern is really about getting energy flowing. And he did also bring up nuclear energy. There's some talk about maybe looking into bringing or raising that in Germany, because of course Germany has been phasing out nuclear energy, but even that, at least in some circles, especially in business production or industry production, that is being considered potentially as an option. And people are looking into maybe how that could work out if that is something that could happen. But of course, that would be a huge political U-turn here in Germany.
Right, and I'm seeing global equities markets bouncing, looking quite green. What can we expect from European markets?
Well, the markets are actually, in positive. They're gaining. They're continuing their gains they made on Monday. And that, of course, also comes from the fact that there was no direction from the U.S. markets. The U.S. markets were closed on Monday. So we will be getting at least more direction later in the day when the U.S. markets have opened. But the fact is that they are gaining compared to last week. And of course, energy stocks are performing really well given the current climate that we're in, with energy being sort of the big, the big question congestion, and of course, everyone, being concerned about whether they'll be getting enough energy. So energy stocks are doing really well, but so are other stocks because, of course, there were major losses last week. So, so far, a positive week, but of course, coming off of a week of heavy losses. So, yeah, we'll see if they can regain what they lost last week.
Right, Chip. We'll see. Thank you so much, Chip, right there in Berlin. Let's move on to Asia now. We see Asia-Pacific markets were mostly buoyant today, while Bitcoin continued to rise after a recent rebound. Meanwhile, Australia's central bank says inflation will peak by the end of the year. Japanese stocks led gains, the Nikkei 225 trading 1.84% higher, closed at 26,246 points, while the Topix index actually rose by 2.05% to close at 1,856 points. Shares of conglomerate SoftBank Group surged by nearly 3%, while Taiwan's TAIEX index also rose more than 2% to finish at 15,728 points. Hong Kong's Hang Seng index climbed 1.66% as of the final hour of trading, with tech stocks Tencent and Alibaba posting gains of 2.27% and 1.25% respectively. Mainland Chinese stocks struggled for gains, with the Shanghai Composite dipping 0.26% to close at 3,306 points, while the Shenzhen Components sat at 0.51% lower at 12,423 points. And stock futures rose in early morning trade following a brutal week as investors assessed a more aggressive Federal Reserve and rising chances of a recession. Futures on the Dow Jones Industrial Average jumped 500 points to 1.62%. The S&P 500 futures climbed 1.78%, and the Nasdaq 100 futures popped 1.79%, while U.S. stock markets were closed Monday. The major averages suffered their 10th losing week in 11 last week on fears that the central bank will hike rates aggressively to tame inflation at the risk of causing an economic downturn. The S&P 500 dropped about 5.8% last week for its biggest weekly loss since March 2020, dipping deeper into bear market territory. And oil prices rose today on high summer fuel demand, while supplies remain tight because of sanctions on Russian oil after its invasion of Ukraine. Brent crude rose $1.67 to $115.80 a barrel. On the U.S. West Texas Intermediate crude for July, which expires later on Tuesday, that's today, rose $2.38 to $110.41 a barrel. The more active WTI contract for August was up $2.48 at $110.47 a barrel. UBS analysts said despite concerns over economic growth, the latest data on flight activity and mobility on U.S. roads continues to show solid oil demand. And now let's look at the metals market. We see gold prices eased today as headwinds from an uptick in U.S. Treasury yields amid prospects of more interest rate hikes offset support from a retreat in the dollar. Spot gold fell 0.1% to $1,836 per ounce. That's in early trade. U.S. gold futures were flat at $1,839. While the dollar, which has actually been the key driver for gold, is significantly softer. The countervailing force is coming from a much higher U.S. Treasury yield. That's according to analysts. The dollar weakened, making the bullion more attractive for buyers holding other currencies. But benchmark U.S. 10-year Treasury yields rose the highest interest rates, and bond yields increased the opportunity cost of holding gold, which yields no interest. All right, we'll take a break now. When we come back, we'll head on to the commodities market. That's in a moment. Do stay with us.
The Dangote Petroleum Refinery is going to be the largest single-train petroleum refinery in the world. Dangote Industries have enormous confidence in the potential of Nigeria. Africa is like an unexplored gold mine. We know there is huge opportunities here.
What makes this project different than others is for sure the size. This project is transformation for the country and for the continent, I would say.
The Dangote fertilizer plant will transform the agricultural sector. we go for the state-of-the-art technology. It will help to create employment and to reduce the massive demand on foreign imports.
It's going to have a major impact on the lives of the Africans. It's a moment of great pride.
Welcome back. Let's head on to the commodity market now. According to the International Air Transport Association, the average price of aviation fuel, otherwise known as dual-purpose kerosene or jet fuel, as A1, increased by 128.9% year-on-year to $177.01 per barrel globally. It's a growing source of concern for airline operators. There's a limit to how much of this cost can be passed on to passengers. Let's talk to Maiwa again, our analyst, a financial derivatives company, joining us right there from VI. Great to have you, Maiwa.
Hello, Ladi. Good afternoon. Thank you for having me.
Yeah. So what is the reason for this latest surge in aviation fuel prices? And how soon do you think passengers will, see a respite from all of this rising costs for traveling?
Well, we all know that it's not only aviation fuel that has been experiencing a rise in prices. Other crude oil products have also experienced this rise in price, right? But the reason why the price increase in aviation fuel is higher than other fossil fuels is for majorly two reasons. Number one, we've seen increased demand, right? Since the pandemic, we have seen COVID restrictions being lifted. So we've seen an increase in air travel, right? We've seen an increase in number of flights, the airports are packed full, and then so this has led to increased demand in aviation fuel. Already as of March 2022, the IATA mentioned that air travel has increased by about 76% compared to a year ago, and then it's now about 5% below pre-pandemic levels. So we're seeing that increased demand for air travel, and this has led to increase in the demand for aviation fuel. And number two, we have supply constraints. And we see that also during the pandemic, a lot of US distillers that distill, the aviation fuel, a lot of them blended out their excess aviation fuels into their diesel pool. They further refined it into gasoline because the air travel industry was hit with the pandemic. And so now what we have with supply is that supply inventory levels are about 20% below pre-pandemic levels. So this is coinciding with increased demand. And then the European counterparts cannot really help right now due to the Russia-Ukraine war. And so this has led to a supply-demand gap that has put a lot of pressure on the prices of aviation fuel. As for the respite for passengers, in the short term, we expect that we continue to see an increase in the price of aviation fuel. We have summer travel coming up, increased economic activities, and this will continue to put pressure on the price for aviation fuel. However, we see that crude oil, aviation fuel are kind of moving in a cyclical manner, right? And so we don't expect that this increase in prices would continue in the medium term. But this is largely dependent on the Russia-Ukraine war, the length and the outcome of the war, as well as the rising inflation, global inflation that we currently have.
Right, and let's just say, the war, keeps going, and prices, the aviation fuel prices keep going up, and the players there have to actually raise their ticket prices. What do you think is going to happen? Are the passengers going to switch to another mode of transportation?
Well, it would depend. If it's international travel, there's no option for that, right? But we might see a lot of people pull back on their summer travel plans. But for business plans, people would have to travel. But when we look locally to Nigeria, we would most likely see a decline in interstate travel. More people would switch to road, even though it's not safe. Or people would generally try to reduce the number of traveling they have to do in the country.
Right, and we've seen jet fuel. That's approximately 40% of airlines' cost, while global price of aviation fuel has increased by approximately, that's about 128% in 1 year. The price in Nigeria increased by about 270% to 714 naira per litre in half that period. And this has increased domestic airlines' costs by about 120%, compressing their margins, if at all any. How long can Nigerian operators cope with this cost increase without compromising safety or facing solvency issues?
Well, Nigeria, the case in Nigeria, like you've explained, is much higher than what we're seeing globally. And Nigeria's case is a bit peculiar. This is due to difficulty in assessing forex and also high airline operating costs in Nigeria, high taxes, right? So these factors make Nigeria's case a bit more peculiar than what we see globally, right? But for Nigeria already, we have the airline operators of Nigeria already came out to say recently in the past few days that they expect that 3 airlines would actually collapse in the next few weeks, right? If something is not done about aviation fuel. And so I don't think that a lot of them would be able to cope with the continued increase in aviation fuel prices. But thankfully, the federal government announced that they would release about 10,000 metric tons of aviation fuel to the airliners. They announced that, but this has not been implemented yet. But there are other ways that the federal government can help these airline operators. For instance, give them access to forex. They're getting it at a much higher rate at the parallel market. Maybe this will help ease pressure on a lot of these companies, because if these things continue, the bottom line of these companies will be affected, and then they might not be able to continue in the long term or medium term, should we say.
Do you think the aviation operators would maybe demand dollars at some point, due to this forex issues we're having?
Well, I think that it's possible that they do, right? I think they just really want access to affordable foreign exchange. And I think that there are also other ways that they can actually go around this. It's like locking in, hedging their jet fuel expenditures. If we look at global companies like Ryanair, look at Lufthansa. Ryanair, for instance, has locked in their jet fuel expenditures at about $65 per barrel till March 2023. We have Lufthansa has locked in at about $63 per barrel for the whole of 2022. So maybe the airlines also need to look at switching their business model or modifying their business model to lock in prices, like in terms of forward contracts, sign binding contracts with the local oil marketers to see if they can lock in prices at a much cheaper rate before it keeps on increasing. But then it is possible that they request for direct access for foreign exchange from the CBN, from the federal government, yes.
All right, we'll keep watching how that plays out. But the demand for aviation fuel in Nigeria seems to have increased more than other, fossil fuels. So as the price of kerosene, what is the reason for the astronomical demand growth, and what is the knock-on effect of this increase?
I think it's basically go back to insecurity, right? A lot of travel that we used to have by road has been reduced. A lot of people would rather use the air travel than go on the roads. There's kidnapping, there's terrorism. Insecurity is a major challenge. We had the railway that was like an alternative to road travel, but that also has been compromised by insecurity lately. So that is driving the demand for air travel that we see locally. The knock-on effect rather of this is that we probably see more people switch back to road, and with this we might see increased kidnappings and all sorts. And then it's possible that some operators buy compromised or contaminated fuel, and this may lead to crashes. But we hope nobody does that, right? And then also we might see flights reduce operators reduce the number of flights and so on. So these are some of the knock-on effects that we might see if with the increase in aviation fuel prices.
Right. All right, we'll keep tracking that price. Thank you so much, Mayo Ege, analyst, financial director of this company. It's great having you. All right, now let's take a look at other stories. See, South African economic activity bounced back strongly in May after the worst flooding in almost 3 decades, which damaged businesses and halted operations of the country's biggest port. That's according to the BankServe Africa Economic Transactions Index. The BETI, which monitors interbank payments, rose to 143.5 in May from a revised 137.6 in April That suggests a robust recovery of Africa's most industrialized economy. And Namibia expects its largest oil discovery since independence will assist its economic system double by 2040. That was stated by the Nationwide Petroleum Corporation of Namibia. And the Total Energy stated in February it had made an important oil discovery over the coast of Namibia, 3 weeks after Shell introduced the discovery of the Southwest African nation. Explorers have drilled greater than a dozen exploration wells seeking oil and fuel, while consultants and analysts estimated the mixed recoverable discoveries at almost 4 billion barrels. The oil and fuel trade can also be famous for prolonged developments, particularly in areas without established infrastructure. In Uganda, growth of the massive oil reserves first round was seen in 2006, and simply has begun the crude oil and is not going to attain worldwide markets till about 2025. Those are the projections seen there by analysts. An Egyptian natural gas holding company and energy giant Chevron have signed in Cairo a memorandum of understanding on the transport, import, and liquefaction and export of gas from the East Mediterranean to Egypt. And that's according to the Ministry of Petroleum and Mineral Resources. According to the ministry, the MOU signed by Magdi Gulal as the head of EGAS and Chevron's East Mediterranean managing director aim to develop the needed infrastructure to transport the available natural gas from the East Mediterranean to Egypt. EGAS and Chevron also agreed to form a negotiation committee to allow all parties agree on future projects in this regard, as well as to conduct studies on producing low-carbon liquefied natural gas. And Zimbabwe's central bank has agreed to provide bakers the full requirements of foreign currency for the importation of inputs and procurement of fuel to push down the price of bread. The central bank governor made a statement. The bank's association met in June. After discussions, they agreed to review the price of bread downwards. The price of bread had gone up in recent weeks as local currency continued to plunge, especially on the black markets. And that's it on Business Incorporated. Thanks so much for watching. I'm Ladi Williams. Bye for now.